So, hi everyone, very good evening to all of you. We all are gathered here today for India's first digital EV conclave for discussing on the leasing and debt landscape for EV sector. Well, today India is world's largest importer of fuel and third largest consumer of oil. Not only this, we are one of the most polluted countries in the world. Mr. Narendra Modi has a great deal of focus towards converting all vehicles in India to electric vehicles by 2030. Though the various schemes like PLI or FAME, government has taken a lot of initiatives and they're diligently working to find a solution. But the need of the hour, I think, is mobilization of capital and finance towards the EV segment. So today, we would like to throw some light on the leasing and financing landscape for EVs in India. And it's my honor to be running this panel with some leading players of the industry. So welcome to all of you. And I would request all of you to give your introduction. Maybe we can start with Monika.
Thank you so much, Rashi. And what you said is so very apt. I'm Monika Saxena. I represent RevFin here. I'm a Chief Strategy Officer here with RevFin. I've been working with RevFin for almost a year and a half. So that's about me.
Ankit.
Yeah, thanks, Rashi, and thanks for organizing this. My name is Ankit, and I head business development and corporate partnerships at Zypp Invest. Zypp Invest happens to be one of the largest enabler for lease financing for EV sector as well. So we're very proud about it, and happy to share my views today on this forum. Thank you.
Pankaj.
Hi, I'm Pankaj. I'm CEO for Mufin Green Finance. We are one of the early birds to start EV financing in the country. We currently have financed EV worth more than 350 crores so far. So our portfolio comprises of both B2B and B2C. As a book, we currently have a portfolio of 70% is retail, 30% is B2B. We have a book size currently active of more than 200 crore as of right now. This financial year, we have grown up to 7x from our preceding number of last year and intending to grow probably at a similar pace or even more in coming years. We are aggressively looking at financing the EV ecosystem. We are not only financing vehicles, we are also financing assets like swappable batteries, chargers, and the entire ecosystem. So the whole thought is that, EV is something like a penetration would actually drive in when you would finance the ecosystem, when, related things also get a finance and probably things happen. We did 2 days back, we did our biggest tranche of our electric chargers worth 15 crores that we have done very recently. We did it with Blue Smart, a big deal, which we have just closed 2 weeks back.
And congratulations, Pankaj. That's
great. Thank you.
Nikhil, can you give a brief introduction about yourself, please?
Hey, thanks, Rashi. Hi, this is Nikhil. I'm part of the corporate lending team at Northern Arc Capital. We are working with startups across different segments. But have seen a lot of action in the last 12-18 months on the side of the EV ecosystem. So we've been working with OEMs, been working with logistic partners on the EV side, battery infrastructure. And very, very interesting space. Requires interesting solutions around debt financing. So in that sense, this is a very interesting space, and yeah, looking forward to a very interesting conversation with quite a diversified set of folks here.
Thank you so much, Nikhil. So how we will keep the construct of the session is that I'll ask questions and all of you can contribute, and also we'll have a Q&A session post the discussion wherein we will open the forum for the audience, and then we can answer their questions as well, right? So let me ask my very first question, which is a very generic one, to keep the context in place. So we talk about financing, we talk about how it will change the EV ecosystem. So let us first understand the root cause of the problem. What are the challenges with EV financing? Why banks and NBFCs are still today reluctant to finance this market? So maybe Nikhil, if you can,
Yes.
help us understand the challenges, and then everybody else can, share their views on it.
Yeah, sure. I think, I mean, with respect to, restrictions, challenges, I think this is a very super fast evolving sort of an ecosystem. We are seeing, I think we've seen numerous companies mushrooming in this space in the last, couple of years. So in that sense, I think there is a lot of nascency in the ecosystem. I think there is while there is a lot of innovation, I think the availability of data around the life of the asset, which is the vehicle and the battery. I think if there was more data availability around probably like a cohort, how a particular asset has performed over the last 2 years, 3 years, with respect to the vehicle, with respect to the life cycle of the battery. I think in that sense, the underwriting could be a little more, fine-tuned in that sense. So yeah, I think that's where sort of we are, because this is a very fast moving sort of a segment. I think we are hearing of innovations, developments on the technology side every few months. I think that's it's sort of a wait and watch for a lot of and institutions. But what I want to really sort of point out here is the this was very sort of similar to what happened in the renewable energy space probably a decade back, where the banks sort of stayed away, and NBFCs were the ones who sort of anchored the sector, the likes of L&T Finance and Tata Capital, who kind of anchored the industry with coming in early, and that over a bit of time gave a lot of comfort for banks to come in. I think similar sort of trend here, we will probably see a lot more bank participation going forward. Yeah.
So true. So nascency and unavailability of data are the two challenges that Nikhil has highlighted. Monika, any more challenges that you foresee here?
So Rashi, as Nikhil said, yes, nascency, non-availability of data. And something else, I think what Nikhil talked about, but more about the vehicle as a product is not tested as much. And that goes back to what he said, that how long would the battery last? How long would the vehicle last? And that really makes the banks or NBFC or anyone think as to how should we loan? I mean, what is the right way to underwrite the product, underwrite the customer? And the second thing is this, the secondary market for the product is not strong yet. When we get into the financing, it is important that the secondary market, after this vehicle is sold or runs its life, the first life, what happens to it? So secondary market is not strengthened. We don't even know how will it shape up. And the customer profile for EV vehicles, more so when we talk about e-rickshaw, is very different. These are the people who are new to credit, NTC segment. These are the people who may not even have a CIBIL score, forget about the good, bad, evil. And when that is a profile who you are financing a product, it gets into it. Will a bank like to touch that audience? Maybe never. That's where an NBFC and the digital players get into it, because they are very, very agile. For example, at RevFin, we have come up with a very unique way of underwriting people using psychometric profile. We look at biometric, we look at psychometric, and then we look at a bureau check. So multiple things, when they come together, that's when it becomes easy to be financing vehicles, more so the e-rickshaw segment that I'm talking about. And when we talk about two-wheelers, the riders or the e-commerce riders, those have a different challenges associated with it. So in addition to what Nikhil said, largely untested product, untested market, untested customer segment, all of that makes it challenging for many others to be touching this segment. And that's where it becomes important that we know the complete ecosystem. And as I was talking to you, Rashi, a little while back, how closely we are partnering with OEMs, with dealers,
Right.
to make sure that any risk that any one of us may have is mitigated, is shared across different stakeholders.
Right, very well said. So credit unworthiness, I think, is what you said, and market is very unstructured right now. So there's a lot of inhibitions that banks and NBFCs today have to think of financing in these areas. Very well said, Monika. What about
just one bit here? In fact, that's why RevFin has a mission or a vision of financial inclusion.
Right,
These are the ones
right,
who want to make sure that they're included, even if others are not ready to be including them as
right.
much.
And in fact, one very important point that you highlighted, which is a secondary market for EVs, which is not yet so developed in the country, and which again makes it very difficult for financing companies to invest because they're not sure of the residual value of these assets. Right. So what do you have to say, Ankit, here?
Yeah, no, valid points, I think, Rashi and others, right? See, underwriting by a banking system is, if you look at the credit underwriting process, is largely data driven, right? And in a sunrise sector, when enough data is not available, it's not easy for a traditional model to use their traditional underwriting abilities to, to provide credit to a new sector. I think that is what we continue to see, right? Nikhil mentioned about the renewable, but if you go back to the telecom sector, similar things happened, right, in the 90s. The sector was new and probably no one wanted, especially the traditional banks did not want to finance it. I think that leaves a lot of space for new players like GRIP or RevFin or even Mufin, right? All of us are here who have dipped our fingers already, right, in this massive area. Debt, is one product, or lease financing is another product which works a little bit better. But I really echo with Monika, right? Risk participation, risk sharing, and if enabled by government, which was done and is being done in this space in some to some extent, has enabled some early movers in the financing space to take the steps. And I'm sure that mainstream bank financing or mainstream NBFC financing for the EV sector is not very far, considering the progress we have seen over the last 2-3 years. The progress has been massive, right? I don't remember any sector growing this fast in the last 20 years, honestly. So right from 2017, when that announcement was made by Mr. Gadkari that we want 2030 to be all EV, it was pretty massive announcement, right? And here we are in 2023. I think we are still far away, but I think the progress is tremendous already. So I think better times ahead for the sector and definitely more access to finance going forward.
Sounds great, Ankit. Pankaj, any thoughts here?
So I think so. I look at from a little more different from manufacturing side. Today, when we talk about manufacturing of EV, it's a big challenge. Today, there are demands which are constantly getting ramped up. There is a scarcity of probably components because we are all aware about that. For cells, we are dependent on China. There are not very strong guidelines which have come in. Today, if you have to buy a two-wheeler, correct? If you look at a compliant battery, there are only 1 or 2 two-wheelers which are available. Most of them are not compliant with the new guidelines which have come on IS 150-6, correct? So I think so. As the sector is a super evolving ecosystem right now, there's a lot of uncertainty which are linked to it. Being it on a reliability front, whether you call it as a product risk, whether you call it as a residual value, whether you call it the life of this, but there is a lot of uncertainty with it. There is an uncertainty in form of, even change electric vehicles. They are giving FAME subsidies, but there have been situations where there is a default of subsidy at a government end because of certain lacunas at certain OEMs level. Correct. So there is a lot of uncertainty. The people who have financed vehicles on that front, there could be an issue and there could be a constraint on it. What actually, according to me, which is driving the EV sector growth is its economics, and the economics works fantastically well when we talk about in the commercial EV space. It makes a fantastic economics. The only issue is left, which I think so for this sector to groom in, is around on the cost if we can stabilize the cost of production or a cost of product, and we can optimize as the number are going big, then I think so it would lead to a lot of change in the ecosystem. It would bring the residual value. We know that today battery which we are buying at a price X, tomorrow in next 3 months it would be X plus 5,000 rupees. And this is something that we are seeing it from last 1.5 years. Every quarter we are seeing price increase of each vehicle, whether it is by 1,000, 2,000, or in e-rickshaw it has probably changed by 25,000 rupees so far. So
Yeah.
I think so these are the visibility which is stopping large institutions to come into a picture.
So true. So ask
On the
us.
other hand side,
Sure,
on
sure.
the other hand side, I see a lot of promising things which are also coming in. Government, probably World Bank is coming with a certain scheme to probably risk sharing capital support. And I think so that is going to keep evolving. But there is a one more uncertainty which we haven't talked about, is that, electricity, vehicle adaptability in a long routes, correct? Today, when you talk about a last mile connectivity, I think so, yes, it can be replaced by electric fuel, correct? But when you talk about a commercial on a large size, maybe hydrogen is a right solution. So the evolution which we are currently talking about from a IC engine to green ecosystem, I see there would be multiple products which are going to come up. EV has really been fantastically well because it started with the entry-level product and a place where the economics was fantastically fine, correct? Because of the rising fuel pricing. So looking at that aspect, I see a lot of scope in terms of definitely last mile connectivity, and the local transport contributes to the 60 to 70% of the total market share. So definitely, yes, EV share would be there. And I think so, but there are going to be more green technologies which are going to come up in the ecosystem soon also.
Very interesting, Pankaj. So I picked up one of your points, which you said that scarcity of components or scarcity of, availability of EV vehicles in the market. So you think that discourages banks, NBFCs, fintech companies to finance this sector because of the, yeah.
So I would say the answer is mix and match to this. And people sitting on the board can have a different opinion. From a manufacturing standpoint of view, for me to put up a same part in using or refurbishing or reactivating service, I have a less profit than putting up it into a new product and sell the product, where I make my major margins. Correct? So, there is always a 51%. Any best of the best OEM would have a 51% inclination to sell it, put it into new vehicle and sell it. Correct? That is the crux of the matter. And that is what is creating illusion. And I think so there is a time where, a lot of current components are dependent from China right now. But I am expecting that, when the large players like Hero MotoCorp is joining the game, correct? TVS of the world are coming up with more products. They are increasing their strength on two-wheeler side. Probably L5 coming into picture for the loader segment. I don't see that there is going to be a L3 again in loader system going forward in the ecosystem. I feel so. Maybe I'm wrong, correct? Or probably, I don't know. So the whole thought is that, there is going to be a lot of transformation which is going to happen. And it may not contribute significantly, but there is definitely some level of contribution which is creating that risk factor.
Sounds great. So while we talk about transformation, and definitely, we know there is traditional lending available in the market, but I also know that there are a lot of interesting products are evolving, over the period of time in both debt and leasing industry. So if you can throw some light in what kind of products now we have, in the current new age era where, they are supporting EV ecosystem, so that, the challenges that we discussed are being taken care of. So maybe Monika, if you can let us know what all products, interesting, innovative products that we have, like with RevFin, if there are any interesting products that you would like to, share here.
So when you talk about products, Rashi, you are talking about the financing products?
I mean, yes, which has evolved, like apart from the traditional lending, if there anything interesting which the new age startups now are, accepting, or they are helping them coming out from the traditional leasing models,
Yeah, so
the lending models.
Yeah, so when you talk about from RevFin perspective, when we look at e-rickshaw, largely it is a loan that we give to the customers for 18 months and 21 months or whatever. However, when we came to a two-wheeler with the fleet operator, we tried working with that if we could have these drivers take this two-wheeler on loan, for example, maybe with different e-commerce companies or via fleet operators. We realized that's not working with them. Maybe because they are not very sure how long will they remain as a rider with this e-commerce company. So that is when we have to continuously evolve our financial products also. Maybe that is where somewhere around a rental opportunity or maybe a lease to own, some of the different financial products starts getting developed, sometimes in partnership with OEM, sometimes independently, because every customer is different. Every different customer types have a different need, and hence the different products get evolved. So when we were when we started with it, we were thinking maybe we will start giving loan. We tried, but now we are coming to a conclusion. Maybe when it comes to fleet operators or e-commerce, they really want to be asset light. So they would rather have that we develop a lease product and we tell it to the drivers or the riders, every month you pay a rental for 4,000, 5,000 and own a vehicle. And whenever you want to move out of it, either you buy it at a residual value, which is there, or maybe you transfer that vehicle to some other rider who comes into it. So from a fintech perspective, from an organization perspective, we have to continuously evolve different products, and not just these products. Sometimes it's what about LTV? Should we give 80%, 60%, 70%? Should the EMIs be X? Because we have to look at what is the amount this person is taking home every day. What is the monthly income that he's earning? And basis that we have to look at our EMI duration, would it be 18, 21, 24? And that is it's not just that. Then we have to look at if we increase the EMI duration, the tenor of the EMIs or the tenor of the loan or the lease period, will the vehicle last that long in a steady condition for the person to be owning the vehicle, riding the vehicle and making money out of it? So yes, to your point, we continuously come up with different innovative products and different ways of reaching out to a different customer, that it becomes easier for them to own the vehicle or support us in the EV adoption journey. For example, when we talk about maybe the charging station or the swapping batteries, the financial model may be a little different there.
So maybe what you're suggesting is that we are not just focusing on just providing the financing to the last mile user, the user, but we are also focusing on the sustainability of the product, that the rider should use it till the end, so that it makes a viable sense for him also to use the product, right? And that is where you're bringing the innovation. You're thinking of how the tenor of the financing should be, whether we should give it on a rental model or how the EMIs should look like.
Exactly.
Right?
It has to be viable for the rider, for the owner, and it has to be viable and for us also from the business perspective. So that's where a model which works well for all of us comes into picture.
So driver come model is something which is a buzz these days, wherein a driver come owner model, which is a buzz these days. Would you like to throw some light there?
So driver come owner is a very simple model, maybe where the person takes a vehicle, buys it or takes it on loan, and he drives it and he pays the EMI back. So again, when it comes to when we talk about two-wheeler, this is a buzzword, DCO model that they could be. But when the buzzword remains a buzzword number of times, when you get into it, you realize that not many of them want to operate out of DCO model. They would rather have a rental model, because that whole segment of e-commerce and the fleet operator where the ride, you have these, be it Tata 1mg or Zomato's or Zepto's, all of them, the riders who are there, their stickiness to the job is not long, is not tested. So once when they are not sure how long they're going to be on the roll, then the kind of model also is, which is still under the testing stage, if I may say.
Sounds great, Monika. Pankaj, what do you have to say here?
I think so. It's on the, I would say it's a credit underwriting model, correct? How you choose and create a right. So we do not have predefined products or something like that, but we try and customize product for our partners. at a B2B scale. Because today, let's say, if I am working with Zypp, and I'm proud to share that, I was one of the first NBFC to start lending work with Zypp way back, correct? The whole thought is that, we love to customize the product. What is the business requirement of it? How do we align it? How do we take care of their requirement and as well as take care of our risk, correct? Which could be in form of anything. I believe that, if we really want to do an electrification, DCO is a model, correct? But which product, which category, which segment, and how we are going to take and underwrite that risk is something very important and different. So we will not be able to talk about it until unless, there is a proper model being thought of, correct? But I firmly believe that DCO is something which can really give a scale to electrification with any kind. But there, I think so, B2B partner need to come up in a very different way and a very different approach.
Great, Pankaj. Nikhil, your take in this?
Yeah, so I mean, we have a very so currently we have a wholesale view to this, right? I mean, we are working with folks who are manufacturing, who are setting up battery infrastructure. But what's more interesting here is there is a lot of partnership collaboration that we are seeing across the segment, right? You have your OEMs partnering with leasing companies, or you have your battery infra companies partnering with fintechs. So in that sense, I think there is a lot of collaboration and the urge to sort of provide a more integrated solution to all the users out there. So in that sense, I think we've come across a lot of these hybrid models. Some are capital intensive, who are sort of looking to do on balance sheet financing and then eventually use the money to buy the vehicles and then either do logistics or sort of other services. On the other side, there are a lot of platforms who are just sort of who are buying the battery from the battery manufacturers and providing just the swap infra. So I think in that sense, what we're sort of looking to understand is, where does the unit economics lie? How are the companies doing on gross margins, CM1, CM2, CM3? How long does the asset take to sort of break even, 6 months, 12 months, 18 months, and then sort of structure the debt accordingly. I think we are seeing more innovation there. There are some guarantor companies coming in and providing guarantees to the loans that are given by the fintechs. So a lot of evolving sort of models. I think besides the NBFCs, there is a lot of significant interest from the DFIs also to sort of come in and do long-term financing, structured finance solutions. So yeah, I think in that sense, I think obviously the traditional financing is still not there, but then there is a lot of innovation on the financing that is sort of coming through. So quite exciting times in that sense.
Very true. Ankit, what do you have to say here?
Yeah, no, I think for a sunrise sector, right, innovation in the financial products is paramount. I think what we have seen with EV is that it has really taken off, right? If I talk about leasing as a product, which is definitely helping the EV sector, which is a capital intensive sector, right? Not only just one part of it, but the entire ecosystem from charging infra to batteries to the vehicles themselves are high capex items, right? Now, leasing in that sense gives the sector breathing space before that unit economics works out, before the sector achieves scale, and then the unit economics kicks in, right, with the ability of the lessee to pay the installments back. So I think I agree with everyone's point. Just one thing I think which I feel that could be a boost for the sector, right? If you look at the sector itself, there are 4 or 5 players, right? The rider, the fleet companies, the e-commerce companies, the OEMs, and the financiers themselves, probably the 5 parts of the puzzle. If a risk sharing mechanism can be worked out, I think some of us are already working on it. Some models are there in the market, but nothing scalable, right? Rather than leaving the entire risk on the financier or on the poor rider, I guess, which is difficult to finance and fund, if it is distributed in the ecosystem, as Monika mentioned, right, the likes of Zepto, Zomato, and stuff like that. So B2B2C is a very good way to diversify risk. The stronger party takes a pie of the risk, right? The OEMs, as Pankaj mentioned, right, the OEMs are in a hurry to finance, in a hurry to produce more, right, rather than worrying about providing good quality service to the existing fleet or providing some kind of backstop in terms of how the vehicle performs over 2 years, 3 years. So I think that kind of mechanism, if facilitated by, let's say, a central government agency, will be really useful, right? Rather than just leaving the risk on the couple of players, that's the additional good. This will help. A product of this kind will help the entire ecosystem along the way.
Great, Ankit. So I have a very interesting question. As a startup, I mean, so I work, at a great length with Grip team. I work with Mufin team, and so with Northern Arc team. So I wanted to understand, as a startup, what is a better option, debt or leasing? It looks like a controversial point here, but I would definitely like to know your views here. That what do you suggest a startup should do? What if we compare the rates? What are the better options? And what is your take there? Yeah. So Nikhil, maybe I would like to hear you first, and then we'll take it to others.
No, of course, obviously the bias is towards debt financing, right?
Yes.
But nevertheless, I think for a startup to assess which is a better option, ties to what is the financial standing of the company, what's the balance sheet size, what is the access of capital, what is the cost. So in that sense, I think at a very early stage, and obviously that's the trend that we have seen, a lot of companies have gone the leasing route because again there is lesser commitment in terms of financial investment, because these are sort of very simple solutions, in the sense that you have access to the asset, there is a monthly repayment, and at the end of the tenure you either decide to purchase the vehicle or you sort of roll over, right? And also, given there is a significant technology advancement that is sort of happening on an ongoing basis, so in that sense, probably at the end of one of your lease cycle, you probably will see that there is a a newer version of the vehicle or the newer version of battery available out there. I think, however, as the companies sort of progress in the life cycle of I would say lending, banks, traditional NBFCs would prefer on balance sheet lending, because these are more asset backed lending, right? So to sort of progress on the cost of capital sort of ladder, I think there is the leasing stage, and then you sort of mix it up with debt financing and leasing. But yeah, banks and traditional NBFCs are going to sort of prefer backing the asset on the books. So yeah, that's my sort of take here.
Sure. So you suggest that debt is a better option for starters because you have backing of assets.
Yes.
Fair enough. Ankit, what's your take there?
Yeah. So my sense is that all sources of capital have a place in every balance sheet, right? Be it a startup, be it a large company. Even the likes of very large corporates who have access to unlimited lines of bank capital at a very cheap rate today, AAA rated corporates, they do leasing, right, for certain kind of equipments and assets. The point here is that India's leasing market is quite shallow if you compare it to a Western market. And my personal belief is that there's a huge way to go in appreciating the value of leasing, especially for an early stage company, right? Because as I earlier said, you don't want to be paying, you don't want to be making losses at a unit level if you are taking too much debt, right, at the early stages. So in that sense, I'm a little bit biased towards leasing, but in my view, all the sources of capital have a space in the balance sheet at every stage, and it is the judicious use and mix of it by the founders is key. I really appreciate how Zypp has seen that value. I've heard Akash at a number of forums say that we didn't take debt, we leased out, and we used our equity to probably pay the IRR on that leasing, right? Rather than just using that equity to pay for the entire asset. And then that helped him, scale up. So I think it's a classic case study in terms of how to use lease capital and mix it with your equity capital. But yeah, overall, I believe that even debt has a space, in certain sense for a startup for the journey, and a healthy mix is very important. Yeah.
So Pankaj, while we always have a tussle of debt and leasing,
I want to start saying that as a startup,
right,
the most important thing is the valuation. Correct.
Okay.
One is the key focus for any startup. Today, when any startup is talking about valuation, raising money, trust me, leasing is the way to go to. Correct, because that would make that would suffice your purpose too. Correct, but I do agree that you should have all sort of partners on your books or as a partner, so that it gives anybody, whether who is leasing it or whosoever is financing, that they have a mixed bag, and it gives comfort. So today, when I started my relationship and partnership with Zypp, correct, we started on a pure vehicle-based financing. It was not linked to your books. Correct, we did bulk vehicle financing, and it has been fantastic journey. I think so. We have crossed more than 1,200, 1,300 vehicles with you so far. Correct, and probably things have been fantastic. So the whole thought is that I do agree, and that yes, leasing is the way to go. But I think so, in partnership, it is always on the both side. When you are we fight, that's okay. But the whole thought is that we do it for your perspective, and I try and cover my risk and my perspective. Whatever I would do as an NBFC, I would have to be compliant to government and probably take care of all the moving parts when we are doing leasing. So that's okay.
So Pankaj, one thing which irks me a lot, because financial leasing is as good as a debt, in the sense that it is booked as a liability in your company, right? And the disadvantage is that you have to pay GST, but it increases the cost of financing at the end of the day, right? But
so, yeah, it has a dual advantage, and it has a risk also. But probably you are able to underwrite the entire asset cost in 3 years as an operating expense. So which is also a very good story as a startup for you in terms of probably doing that. Secondly, you are not asset heavy, which would increase your valuation anyhow. And probably, and if you have certain commitments on certain things on timelines and everything, and I think so, if they are being taken care of, well, I think so leasing would be a fantastic opportunity overall. If you look at one thing which I really probably talk about, because when we talk about an operating lease or a lease to own kind of a model, things have to be made easy and simple. Always the thought is that if I have to make anything good for you, probably it has to be linked to at the end of the day, work for me as well as work for you. Correct.
So when you say that startups should be asset light? I think that's a favorite question that almost every investor has, whether the company is asset light or asset heavy, right? And there's a concept these days which is very much in of creating a setco kind of a model, so that you can keep the books of your company light. So how much relevance does it have from the financing point of view?
So, if you probably make a subsidy also where you are doing lending, or probably it is again 100% subsidy of yours, but technically, a lot of people are doing it, that they have their own wing, which is a subsidy, which is buying the asset and leasing it to the main primary company. There are structures which are going in startups like this, correct? But there they are taking guarantees, but the valuation goes at a different level, correct? So that's how I see it. But I see it is probably, it has very minimal impact. If I have been into an investor shoe, I see it as a very minimal impact, to be very frank.
What do you have to say here, Monika? What's your take there?
Rashi, I think most of them have spoken what is my say. But yes, when Pankaj started his point and he said, why do startups do whatever they do for valuation, maybe. And so when that is the goal, if they have that, then whether lease or own or co-own, whatever, is all driven by number one, capital choices that you have. And second is, I think I strongly feel it's important that the startups also invest in buying the vehicle, not just leasing out. Because when you buy it, you raise equity, you invest in the vehicles, and then you're able to get the model right. When the unit economics work out, when you get a hang of the model, then you can start exploring at other options also. Yes, lease makes it asset light model, and that is something many companies are going with, and that is easier to do. But I think the focus should also be on owning it as much as on lease form. Of course, it goes back to the capital choices that you have, the finances that you have. But yes, that's my view.
So what you suggest is that we should have a hybrid kind of a model wherein we should have few assets in our books as well, and then we should also do leasing kind of a model so that we maintain that balance.
It's a balanced kind of model that we could say. That is
sure. And Nikhil, what do you have to say here?
Yeah, I think I went first on this debt versus lease.
Sorry?
No. I think we started the discussion with me on this.
All right. Sorry, my bad. Ankit, your take here in this asset light versus asset heavy kind of a model for startups?
Yeah, I think there is a reason why VCs like to have an asset light model, right? I think probably their thought is, VC could answer it better, but probably their thought is, they don't want entire equity money to be used in buying of assets. Rather than, they believe that equity is better utilized for purposes like research or marketing or development of tech, etc. Right? And it's a very fair thing to ask probably. And that is the flavor of the market today, that, don't buy your assets, lease it out, rent it out, don't spend your money, because equity is scarce, right? It's not easy. And why to dilute more when you can get access to the other sources? I think what the EV industry has done, Rashi, so far has made good choices, right? We have a number of players who started very small, but started using debt or leasing as an alternative source, right, from the very beginning. So by the time they scaled up, they were already asset light, and a lot of them are leading players in the segment, right, in their respective EV segment, so to say. So probably it's a choice you have to make. Your capital structure has to look like has to have an objective from the very start. You can't pile up either of the products late in the journey of the startup. So my suggestion and advice will be to look at the capital structure right from the beginning, and have a healthy mix of various products, so that you can scale faster and scale longer.
Great, Ankit. Sounds great. So my second last question to the panel is that what were your budget expectations versus the outcome of 2023 with respect to EV financing? We can start with Monika.
Rashi, we had, as an organization, we had no specific expectation because we feel everything that is needed for EV market to get that impetus is in place. It's all about how fast, how soon we can have EV adoption. So I think whatever came in this budget, be in terms of some subsidy or extension of or the reduction in the tax, reduction in the GST and all of those things, that came as a bonus to us. So for us, it's, I think there was no specific expectation which has not been met. So we are happy with what we have. When we're reducing the custom duty, when if it makes the batteries cheaper, it makes the EV vehicles cost cheaper, less adoption will be faster. So each of those things are just going to help the adoption faster.
Pankaj, what about you? What were your expectations from the budget?
My expectation was very clear. I wanted a EV financing to be part of a priority sector lending, and which didn't happen.
Yeah.
So my expectations are not being met. Policies and everything help, but it will not help the financing domain, because it would bring down the cost. It would just bring down my cost, but it would not flourish the financing, which is the core.
All right. Completely agree. Even I was having that expectation. What about Ankit?
Yeah, I think everyone, I'm aligned to Pankaj's view. I think EV financing as priority sector is definitely the need of the hour. Having said that, I think budget is the annual exercise, right? And there is nobody stops, anybody from doing it midway. What my personal view is that I think there are, in terms of products, right? We've spoken a lot about how the product is maybe not the best product in India right now, and it'll still catch up to it. I think government of India should help find a way to introduce the best EV products in India. Even if that means reducing the import duty on a completely built-in unit or a knockdown unit, right? The duty was rather increased, right? Because you want to show to the ecosystem in India, and that ecosystem includes everyone, right? On a personal level, on a business to business level, that EVs work, right? The products work. It will also work in India if it is working abroad. So if there is a way to show that, give that confidence to the players, that would have been a great boost, so that more and more people buy EVs, more and more NBFCs and banks invest in those EVs. That enabler is very important to get the best of the product to India at a mass market level, and enable a faster adoption by giving that boost of confidence. That the biggest story about EV is the product itself, by the way, right? It's not about anything else. If the product is solid, it'll definitely sell. You'll find market for it. You will find financing for it. How to give that confidence about the product? If that question is helped, it is addressed faster than sooner than later, it will help the ecosystem.
So maybe you're saying that focus on Make in India more.
No, Rashi. In fact, I was trying to say, why not make it easier for import of EVs to start with by reducing the duty on it, right? The completely building units have a very high duty on it. So Make in India will follow when the ecosystem has confidence on the products, right? When the Indian OEM have the confidence that a product is there in the market in US, in Europe, in China, it can very well be modeled it to India as well. So escalate that process of giving the confidence that a product works, right? There are so many good products outside India available, but if you don't make it easier for them to be seen on the roads in India, then the confidence doesn't come, right? We still believe that EVs are probably not the best product in terms of the quality, etc. But that's not true. There are so many good quality products outside India. So love to see them. Yeah.
But Ankit, don't you think it was discouraged a lot, and Make in India was more promoted because of the fact that quality was not controlled because of the products coming from outside India, and we have foreseen few such cases wherein, a lot of, local players mushroomed up in the country, and everybody was making scooters, and the quality check was not there. And that is the reason few of the incidents that happened have happened, because of which EV market, so for some time got a bad name, and people were a little scared to use EVs because of these uncertainties. So do you still feel that it should be encouraged more, or making it?
Yeah, Rashi, but look at established players, right? For example, a Tesla, right? Why isn't Tesla still in India? What stops? And I think Tesla founder has been very vocal about it. What stops him? Just give an example, right? So established players with proven products and brands, enable those to come to India. That's my limited point.
All right. Okay.
We will always have, what we have seen rather is a parallel import kind of stuff, right? People importing in parts and trying to assemble and sell here without a brand, right? If a Tesla or a BYD comes to India and starts selling in bulk at a good price point, which can be achieved by lowering import duties, that is the message I want to give, that a good quality product comes upfront to the market rather than it comes 10 years later, when probably it could have been done earlier.
Ankit, I have a point, just a small point to make here. If this would not happen, correct, and it would have been coming in a very structured way. I belong from an e-rickshaw trade, correct? Trust me, India would not have number of EVs that are there on road today.
Yeah.
This entire approach has actually created an ecosystem. That's I agree that it should be controlled and everything, but it has created a market now. So it has its both side of the world.
It has the both sides. Let's look back, right? Let's look back 20 years back, 1990s, when the electronics market was opened up, right?
Correct.
You would have, because again the imports were discouraged. There was high duty on importing, let's say a television or a printer, for example.
Correct.
You would see parallel imports still happen, right? We used Sony quite early, probably even before it launched, started manufacturing here, right?
Correct.
People imported and traders sold it in India. So that will anyways happen. All I'm trying to say is that you need to, for a new product, the quality needs to be seen right with your own eyes. That will encourage more people to believe in the product and lead to faster adoption. It's more of a signaling effect rather than, on the ground thing, right? It's more of a signaling effect. So even in this case, I guess, now we have India manufactures most of the electronic products. The imports are very low. So that was the point I was trying to. But I do agree with your point as well. It's two sides of the story. So.
Fair enough. Pankaj, any more questions for Ankit?
No. It was just a pointer which I just thought it is relevant for a lot of people who are on this group at the moment. Correct.
Sure. And Nikhil, what's your take here?
Yeah, I think practically, I think what all the lenders are asking for, right? That's the priority sector lending. I think that's the #1 agenda across the board. That how do you push more institutional funding coming into the sector? We saw this with renewables in the past. We saw this with microfinance industry in the past. So sort of if similar sort of support is brought in, I think we'll see a lot of institutional funding sort of flow in to just sort of mention Ankit's point there. I think with great products, I think there is a step-by-step framework being built. For example, now there are incremental guidelines around battery safety, right? Which will sort of come in place. I think it's being done in two phases, phase 1 and phase 2. I think there is a decent amount of sort of steps being taken in the right direction with respect to battery safety, manufacturing, manufacturing of lithium domestic. So yeah, I think we will sort of soon see all of this sort of coming into place in few years. But yeah, I think more sort of support towards battery infra. I don't know, some special tax break for companies doing R&D in the EV battery space. We have seen some, cab service providers, 100% electrified, some tax benefits to, logistics company who go, 100% EV on the fleet. I think those sort of support will help the ecosystem.
Very true. I think priority sector lending was something that everybody had an eye on, and it was a little. I mean, we were expecting it for sure. So the last question, I think, though you guys have covered it all, but still, I would like to specifically ask that any suggestions that you have for government to make financing more reachable to the market. So I know priority sector lending is one area where we all would want government to, to include EV, right? But apart from that, anything else that you guys suggest for government to focus on? Monika, maybe you can share your views here.
Rashi, before I get into this question, I'd like to go back to the earlier question.
All right.
Was on the product. So to the point that BYDs and Teslas have a quality which we still don't have as much in India, and with the import due, everything will become better. But when we look at e-rickshaw today, the kind of quality that we have has been proven, it's been a successful model for all the, because we are largely into e-rickshaw at this point of time, three-wheeler. So the OEMs are so very sure of the quality of their product that they are ready to risk share with us. And that is where it becomes important that when we talk about EV sector becoming the buzzword, which it is, and the EV adoption becoming higher at a faster rate, the OEMs, the manufacturers have to be so very confident that they can get into risk sharing model. Today, when we look at e-rickshaw, multiple OEMs that we partner with, each of them are getting into risk sharing. Similarly with two-wheelers. We have few other OEMs with whom we are partnering, or the manufacturers when we are partnering. They are very sure of their product and they are partnering with us in those terms. So we indeed are in the space where the products are of high quality. I'm not talking about maybe four-wheelers or the cars or many other kind of vehicles. Of course, it's a huge product range. It could be a cold storage or a L5 loader or cars and everything. But in many products, we are there with good products. And because we are so sure of those products that the EV adoption is faster there. And now coming back to in terms of what is it that government can do more of, we all talked about priority sector lending. And I do not know if what else could government do. Maybe others can raise their point, until then I'll think what can government do, because we try to do everything. We don't even think in terms of what can government do for us. Our thoughts are in terms of what can we do to make easy for our customer, to make lending, make leasing, make financing easy for them. We look at multiple ways as we, in terms of, for example, when we talk about two-wheeler, the underwriting is very different than the underwriting of three-wheelers. So our constantly R&D team or the product team is looking at how can we make underwriting is different for the different kind of product category. How can we make ownership easier for them? How can we have the EMIs, the tenor, the insurance? So all the time our focus is on partnering with complete ecosystem. So we are partnering with insurance companies, we are partnering with charging stations operator, battery operators, and all of those, which can make financing lucrative for all of those people who want to buy the EVs. Yes, government has their role to play, but we specifically are not, I mean, whatever comes out of them will be good. We have no specific expectation that they could come up in terms of beyond what everyone else just said.
Very interesting. Nikhil, your take here.
Yeah, I actually want to give an example of, what the government has done in the solar pumping space, right? You issue tenders, you sort of, appoint, there is a private-public partnership sort of, model. Can sort of similarly replicate that, issue tenders to set up a lot of this charging infra, right? That's like one of the most critical aspects with the range anxiety and battery swapping. I think investing in charging infra by the government could be in a PPP sort of a model. You can finance that by issuing bonds. A lot of municipal state governments have sort of done that in renewable side of things, or in biogas. Probably do set up a similar sort of ecosystem on the EV charging infra, where you sort of partner with private companies and set up thousands of infra charging stations across the country.
Great.
Rashi,
What about
the government is doing is they are committing to electrification by 2030. That itself, as long as they commit for it, we have enough business coming in for all the OEMs and all the financiers. So
100%?
I just hope they live up to that commitment of theirs.
I'm sure with their PLI and FAME subsidies, they are doing a lot. GST reduction, EVs. Yes. This is again a big support that government is bringing. But yes, there's still a lot of scope that I feel personally that government can give to still, make EV financing a very interesting area where, we can encourage more, where we can encourage and have better, strong EV ecosystem in the country. So Ankit, what do you have to say here?
No, I think I echo with Nikhil, right? For the solar sector, government set up SECI and, NTPC, and, they developed a model concessionaire agreement, right? Because these are long-term contracts. I think for the charging infra, which is a chicken and egg story, something similar, and even for a charging infra, the break even is pretty much longish because the utilization rates will be low to start with. But a model concession agreement floated by a central agency, controlled by the government, will go a long way in ensuring that a lot of private participation capital comes into this. And that would be an excellent thing to do as a next step. And I do echo with Monika as well. I think government has been doing a lot of things since a while, not just announcements, right? In terms of PLIs and taxes and FAME subsidy, etc., etc. They have been really holding the ecosystem together. But I guess specific measures like this one could be also useful as a next step, as a next scale of growth for the sector.
Yeah, and in fact, one of the challenges that were highlighted in the very start of the session, that we don't have a secondary market for EVs. Maybe government should create a mechanism and facilitate, a secondary market, because that could give a lot of support to banks and NBFCs to finance the sector. So Pankaj, your take here.
I think so. What government is supposed to do, ideally, in my view, they have started taking step on that. They're talking about high quality product. They're talking about high battery standards, which are at a global level. Correct. All these initiatives which government is taking right now are going to, over a period of next 18 to 24 months, would automatically create a secondary market. Because when a high quality cell
very well said, yeah.
So I think so. It is the right steps which already government has taken in terms of on the product side. PLI hasn't come in. It's a pain for all the financiers. Correct. If it would have been a faster access. But I think so. From a product standpoint of view, they have increased the on subsidies. They have increased the probably manufacturing component percentages. Correct. The e-rickshaw, they have come up with the very wonderful guideline in terms of, in terms of compliances, because we in the industry, there are 1,200 players who are manufacturing e-rickshaw, starting from someone doing it as 100 square yard shop to people who are doing it at 100 acre plants. So there is no key differentiator, correct? But all these compliances and everything, it would lead to some level of consolidation, both at two-wheeler and three-wheeler level. It would help in bringing a lot of high-quality product in the ecosystem, correct? The people would still come and fudge the ecosystem and probably go up with the pace. But I think so. Whatever in terms of right level of standards of things, government I think so have taken some initiative already on that line, and I think so. If we make a constant effort to create a secondary market, it will not happen that way. But these quality products, when they would come hit the road in next 1 year, they would automatically start creating a secondary market.
Very rightly said, Pankaj. So, guys, let us move. We have a lot of questions from the audience, and I would like to pick few questions for you guys to, have your thoughts in. So, and I think Pankaj has answered a lot of questions already. So, one of the questions which interests me is, don't you think there should be some mechanism available similar to CBIL, where you can see leasing arrangements for a specific customer? Because for lesser, especially electric vehicles, intention to pay back track record must be visible, which would be easier for other financiers to evaluate their credibility.
So ideally, if NBFC is doing, it would be a part of a CBIL reporting. It says that probably there is a borrowing arrangement in form of some form of other, correct? So I don't know why people are thinking that leasing would not reflect in their CBILs, but in my opinion, it is dependent on the institution, and that's how been even done. The other can probably respond to it. What's their opinion?
So any questions that any of the panelists wants to pick, because most of the questions are being already answered by Pankaj.
I thought if they are only coming to me, so I tried and answer most of it.
Shivam, to your question, is there some mechanism available similar to CBIL where you see intention to pay? So irrespective whether it is leasing, lending or whatever, intention to pay is very important for a financier to assess if possible. And at RevFin, we have a very unique underwriting method where we use a psychometric test, which tells us what is the intent of the person to pay, because we are very sure when we lease or lend a vehicle or put it on loan, that the ability to pay will come into picture. Because when a person has a rickshaw and is running that rickshaw for 30 days a month, he or she will have enough money to repay our EMI. But what is important is, despite having the money, will that person pay back or not? Hence, we have a very, very unique underwriting. This is a product which has been developed with IIT Kharagpur in partnership with them. It's a proprietary product where the psychometric test is being taken by each of the prospect who wants to buy or lease or whatever. Not lease as much, I mean buy a product, and basis the intent to pay, we assess whether we want to give them a loan or not. Of course, we also look at the CBIL, we also look at the other credit bureau, but the psychometric becomes one of the important data points.
I hope Shivam has got his answer. So do you guys want to pick any other question, or we can move? So we have. So with respect to EV financing players, what are your thoughts on competition from traditional NBFC players? What's stopping them to offer EV financing? Nikhil, you want to pick this?
Yeah, I can take that. Yeah, I think that's what I sort of initially mentioned at the start of the discussion. Still sort of limited availability of data around asset life, asset utilization. There are different players talking about battery having a life of 1500 cycles to 2000 to 3000. So in that sense, we are seeing these numbers, in a very, very broad range. But I think if there is, as we sort of, go forward, there is more cohort data, available at an asset level, at a vehicle level, or at a battery level. That will sort of, give more understanding on how we sort of, underwrite. In that sense, I think probably the commercial use space might see a more quicker uptake because these are income generating sort of assets, right? So in that sense, I think Data availability, I think, is more sort of critical, and that's what is sort of holding back a lot of these NBFC traditional NBFCs to sort of go out and participate, including.
I may like to add to Nikhil's point, the data availability. So the new age, when we look at fintechs or the new age organizations, they have a lot of data available to them because most of our vehicles or the vehicles which we finance are IoT enabled. So when those vehicles are IoT enabled, we are capturing thousands and thousands of data every day. How much is the vehicle running, when it is stopped, when it is not running. That enables us to have a very, very strong control over the vehicle, over the rider, and that helps us take the decision, multiple decision points. So I think having that digital platform, having the ability to control a lot of movements or the customers via the digital thing is something which is really helping all the fintechs in moving so much into EV, which maybe a traditional player is not having that control over. It's just what I wanted to add to Nikhil because he brought about the importance of data.
I think another point that I want to sort of raise here, and we obviously discussed this as well, from a a vehicle finance perspective, what is sort of, what happens in the case of default, right? You repossess the vehicles and then there is a secondary market. So that's one another critical aspect here. Still very, very nascent, probably non-existent secondary market on the EV side of things, and that's where the sort of slowdown is.
Thank you, Nikhil and Monika. The next question is, what is a key difference between financing IC engines versus EVs? Are the entry barriers for EV financing startups reduced? Who would like to pick this? Ankit, would you like to answer this question?
Yeah. The financing model, again, I think we spoke about this to some extent, but I guess, the data points which everyone mentioned are a key factor, right? Credit financing is all about assessing and forecasting risk and even, and loss due to default, right? If a default happens. Forecasting is easier when you have a history of data, right? And that is a key difference. It is not per se linked to the product per se, but more about the data and the nascency of the sector and the product. So more data points will in an ICE product, there are sufficient data points to take a call on the risk, right? On the and to forecast the risk. I think that is the key differentiator. EV batteries per se, all are linked to the same point basically that we have been speaking about. So nothing new to add here, I guess.
I think companies like Zypp, I think, are working a great deal in creating this data, which is in return supporting or creating an understanding for the banks and NBFCs to take decision for EV financing. So I think the entry barrier has definitely reduced for EV financing now. Understanding the market from the last 3-4 years, definitely we have an understanding that EVs are a far better product, and they are can be financed by banks and NBFCs, and they can have a good market in place. There is definitely a scope for a secondary market. There is a residual value to these markets, to these vehicles for sure. So I think with time, this barrier would definitely be reduced. It is still a nascent market, but I think we are very much there. The next question is, do companies like Mufin and RevFin invest in startups in building their leasing model?
So we work very closely with startups. We try and understand their requirements, but we have even gone on board working with various players, correct? Where we have given assets to someone and they have further subleased it, correct? So it is on the model, it is on the call that we take as a group, but we don't typically kind of do equity investment or investment in working capital. We do it in the products, and we calculate it primarily on the basis of matrix of what revenue generation would happen to that customer from his clientele or the contracts that he have, basis that we fund.
Thank you, Pankaj. The next question is, can you guys discuss the NPAs during financing? Most leasing financiers put the NPA risk understandably on the OEM. What about debt products where cash collection is done by NBFCs? And how do they look at NBFCs in cases like theft, accidents, etc.?
So, if you want, in case of theft and accident, it's primarily been taken care by NBFCs, and they have insurances and everything hypothecated, which eventually the money comes to the NBFCs, and there are delays and challenges around that, number one. Number two, when we talk about cash collections and everything, yes, it happens, and it happens from the team. There, what we look for a support from our partners is not in terms of NPAs, but we look at it in a support of in terms of if any vehicle which has been repossessed during the journey has to be resold or redeployed. That is a support that we take it from our partners when it comes to financing. And yes, we do collect cash, especially in the e-rickshaw segment, where we currently hold a portfolio of more than close to 150 crores. Probably we have cash collection pool also.
Thank you, Pankaj. The last question we'll take here now, as there's no end to the questions that are pouring in. This question interests me, that why FLDG or subvention being asked from an OEM most of the time, as credit risk shall be in a purview of a financer. Monika, would you like to take this up?
So Rashi, credit risk should be the purview of the financer. The reason why FLDG and other kind of risk mitigation is shared by OEM, because at this point of time, when we talk about OEM, the vehicle, the quality of the vehicle, the life cycle of the vehicle is not being tested. So we just want to make sure everyone has their skin in the game. And that is the reason why OEMs are ready to partner with us in that risk mitigation. Maybe once when we look at ICE vehicle, that may not be the model there, because the vehicle has been proven to be successful. We have a strong secondary market, something that we talked about in the past. So at this point of time, it is a risk sharing we are taking, because no one is very sure of the quality of the vehicle, or
right,
the life cycle and the secondary market of the vehicle. Hence, that is where it is being shared by OEM and dealer and the financiers.
And I think it makes sense. Yeah.
I think so. Only point which could be a very straight answer to that is that, probably OEMs are not doing a credit risk. Here they are doing a product risk, and they are giving FLDGs and subventions for that only.
Yes. Very rightly said. Very rightly said. So so guys, I think it was indeed a very informative session. Any last comments anyone has to share?
I think so. Zypp has been a fantastic partner for us. We see this journey which has come up a long way. I think so. Grip and Mufin were the early two financiers who started working with Zypp, and I think so. Our journey has been great and wonderful. Zypp as a partner, to be very frank.
Thank you so much, Pankaj, for the kind words. Any last comments from Ankit, Monika, Nikhil?
I would just say that I think the forums like these are very, very important for all of us, because one is we get to network with each other and we try to find out our own synergies.
Right.
We must become strong. There's so much of strength in unity. So when we are together with each of the stakeholders and we are talking the same language, it becomes easy for us to go back to the government that you were talking about. What can government do for us? We all can stand together to them. So that's it. And thank you so very much to you, Rashi, for anchoring this for us. It's wonderfully anchored. All of us.
Pleasure is all mine, Monika. Thank you so much for being a part of the session. Ankit, would you like to say something? Yeah.
No, thanks to all of you, Nikhil, Monika, Pankaj, for sharing your thoughts, and Rashi, to you for believing that EV delivery could be a business, could be a long-term viable business. It's not. It's really commendable to start from from 0 to 8,000 bikes now. is really, really commendable. I think, and we can see the impact, right, on the environment, on the ecosystem. I think it's very commendable. I'll encourage more such entrepreneurs who are ready to take that jump and grow the ecosystem. Thank you so much for that.
Thank you, Ankit. Nikhil, anything you want to add?
Yeah, no, I think we will sort of, see more partnerships, collaborations, more innovative structures sort of, coming through with respect to financing, product development. And I think also, I mean, I think it's sort of echo what others said, been a good sort of partnership with Zypp. I think it's a phenomenal journey, over the last 12-18 months. I think a classic sort of, case study. I think sort of similar thoughts came to my mind when we were discussing debt versus leasing, right? I mean, you look at the journey of Zypp and you probably have that answer. So yeah, I think sort of has been a good partnership with Zypp, and hopefully we'll sort of, see more such collaborations across the ecosystem.
100%, Nikhil. And thank you very much, all of you, for taking out time. This was a very informative session indeed, and look forward to have more such sessions with all of you. Thank you so much for your precious time, guys.
Thank you, Rashi.
Thank you. Bye-bye.
Thank you, Rashi. Thank you, everyone.
Thank you,
Thank you.
everyone.
You all, bye.